All right. Good morning, everybody. Good evening. Good everyone hear me? Fantastic, fantastic. How's everybody doing? All right, great, great, great. So we're finally here. MPA webinar. MPA webinar, mastering price action. So before we get started, a couple of things. Okay, a couple of things. Want to know? I want to know your educational level here. At what level you guys are at? 1 second here. Um, Boom. Here we go for me. Okay. We got half and half, 50% from price action, 50% of the people from the four-course bundle, and 40 guys elite members. Great, great, great. How many of you guys are finished with the MPA? Yeah, finished? How many of you guys started? Okay. For those of you guys who have just recently started, like let's say it's been 2 weeks or 3 weeks or 4 weeks, right? You just recently started. Um, this webinar, some of the stuff that I might say in this webinar might be a little bit advanced, but not too advanced if you've gone at least most of the MPA. Most of the MPA. And what I'm going to do is I'm going to mix this webinar a bit and make the MPA and partially four-course bundle. This way, but I'm going to word it in such a way that even MPA students will understand. Yeah? Shall we do that? Shall we also make it, let's get this thing started. And while I get this started, okay, so for some of you guys, this is the first webinar. Welcome, welcome. So if you guys, since those of you who are here the first time, just to let you know, I do things a little bit more interactive. I do expect a lot of back and forth, which means I will ask questions and I do expect you to participate. If it's a public webinar, you can do whatever you want, but you are now MPA students at least and higher, so I do expect you to participate because that is the fastest way to have breakthroughs, right? So, hey, might visit Brunei next year. Oh, Armo's visiting Brunei next year. Hi, Naveen. Do you have students from Pakistan? Yeah, yeah, we have tons of them from Pakistan as well. Okay, is it recording? Yes, it is recorded, and I'm keeping an eye on it. It's recorded on a different machine, so I'm making sure everything is fine and there's no issues there whatsoever. Um, yeah. All right, let's do this here. Okay, I'm going to share my screen. Let me know when you guys can see my screen. I'm sharing it right now. Yeah. Fantastic, fantastic. Audio is okay? Everyone can hear me just fine. Should I make it louder? Okay, fantastic, fantastic. Okay, so we've already spent a good 5 minutes to get to know each other. For those of you who are new, and for those of you who've already been here multiple times, it's always great to see you. Let's get this show started here. Now, so, sorry, there's a question here, Ivan, saying, Naveen, would you consider making a form for the people that started the 4-course bundle? It will give people incentive to buy the course, and it helps us that actually anyone who actually has a 4-course bundle has access to the elite community. Okay, the reason why I don't make a form is because the 4-course bundle is a big course, right? It's a 25-week course, and you need to practice it before you start to play around with it. What happens is when you start playing around with the course a little bit, you feel the surge of confidence, right? How many of you guys get confident when you guys see one of my courses? There is a problem with that. Okay, there's a problem with that. Now, although being confident, that is good, but as you go through each lesson, it is required to one up the previous lesson. Okay, the next course will be even one up to the previous lesson. The next lesson is one up to the previous lesson. So if you get confident enough just by watching one lesson, it is still only a piece of the entire puzzle. Okay, does that make sense? So we need it to keep on building and building and building, and then finally putting it all together. So there is a whole section on timing and roadmap at the end of the 4-course bundle, towards the end of the 4-course bundle, and it's fantastic. I think you guys will, those of you how many of you guys have reached timing already? How to put everything together. Yeah, how do you like it? I spend a lot of time in the timing area. The timing area is the longest section of the entire course. Okay, good, 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 good. I think timing is. Do you know, Lucille? Do you know when timing is at? I think time. I think it's the third section, third section. So, okay. Anyways, let's get started here. So here we go. Now, in the measuring price action course, there's a couple of things that we monitor, right? Which is, one thing is gauging momentum. Okay. Yeah, everything is recorded, and all MPA students and higher, MPA 4-course bundle and elite community members will get this recording. So not to worry. Okay. So engaging in the mastering price action course, we go through something called gauging momentum, right? And this is a very critical piece to us. But along with that, we always want to make sure, here, let me go into the whiteboard so I can show you. Okay, so let's say the markets are, they're hovering sideways. Wait, can everyone see my smiley face I just drew? Okay, great, great. Okay, so I'm going to keep going. So let's say you're in this range, and then the range finally pops out. Hey, the circle, yeah, there's a circle right there. Okay, so we pop out of that range. We're making higher high sequences, and then from the higher high sequences, we get, our normal pullbacks. Okay, and our job is, if this pullback has broken this high, we want to know, is this pullback for real or for not? Which means we need to do that gauging momentum stuff. We need to find out about the rubber band man, right? To see, is he running at full capacity? Is he slowing down? So how do we do that? How do we do that? So let's say this is the 4-hour time frame. Okay, where do we see the power of this? Yeah, we got to go down to the 60. We go down to the 60 minutes. Okay, we already know this is buyer's territory. Okay, it's buyer's territory. That's the guy who started it. And now we're looking at this as, let's see the speed on the 60. So I'm going to magnify this area. So it's going up like this, very aggressively till that height. And then it starts to come down like that. Is that a good sign? Yeah, that is a good sign. What you always want to do is always compare the relativity. Always compare, being like, well, he's going up very strong, but he's coming down struggling. Okay? This is the secondary stage, right? The first stage is obviously know your direction, know the territories, know which way you're headed. Then the next stage is show me signs that one party is struggling, which is if the buyers are strong, then show me the sellers are weak. They're struggling. Don't show me strong sellers also. Okay, so let's do this. Now let me give you guys some conditions. So far so good? Everyone understand so far? Yeah, because then eventually as this happens, sorry, let me, sorry. Okay, because once this happens, eventually the markets are gonna do some crazy stuff like that, and it will get ready to resume its original trend from the original stronger guy. It will continue that. That's where this movement comes from. Okay, so up until this point, if everything makes sense, I'm going to give you guys some quiz questions here so you guys can test your knowledge and just think about it. Because the idea is not, well, what did Naveen say? The idea is, can I make you think about it and question yourself and be like, actually, in this situation, I would do A versus in this situation, I would do B. So let's do some scenarios, okay? Let's do some scenarios. Okay, so all right, so we're looking at the markets. This is the 60-minute still. Okay, markets, popped out of the range like this. Let's say this was that range here from the big 4-hour time frame, and then the markets are starting to come down like this. And then we get that V formation here. Now, if I was to ask you one question, okay, I'm going to draw this wonderful pistol here for you. I'm not the best drawer, but okay. Okay. Okay, here we go. The pistol is bigger than the person, but you get the idea. Okay, so there's a gun to your head. And the gun to your head says, I need you to make me money. If you fail, I will shoot. Okay, now you're looking at this as one of the opportunities. You're looking at this as one of the opportunities, right? And as one of the opportunities, would you say this is a good opportunity? Like my wife. Okay, what I want you to remember is this gun is in your mind. This is always the case in the person's mind. Because in the mind it says, you need to make money every single trade. Okay, you need to fight that. You need to fight back with that because the thing is you can't take every single trade. Now look at the strength of the movement down. Although it says the rubber band man has rested, and then a full rest. But look at the move. Look at the speed it was coming down versus the speed it's going up. We need to keep that in mind. We need to keep that in mind. So now let's take this one step further. What happens in these scenarios? Okay, what happens in these scenarios? Okay, what happens? Okay, generally what happens is you'll have something like this. So I want you to keep this pattern in mind. Okay, and then after this section here, you have two things that can happen. You can have a slowdown that can eventually take off. Okay, that's option one. The next the next option from here is he can go down, make another set, slow down, and then take off. Okay? So this is the reason why you have a deeper pullback sometimes, is because the sellers are not done yet. Okay, Ajay, you're saying I experienced this today? Yeah, you'll see this quite often. You have two types. You have type number one, which is this piece, and then type number two, which is it goes down further before going up. Okay. Ryan, pullback means if the movement is up, right? So if the movement is going up, a pullback is in this up direction. What does the market pull back? That's what a pullback means. Okay. All right. So how do we prepare for this stuff? Couple things you want to notice. If the markets are going up, right? Okay. Would you say the buyers are strong? Yeah, they're pretty powerful, aren't they? Yeah. So as their buyers are going up, but then it comes down aggressively. But he makes a V formation. Two things are happening here. Okay, 4-course bundle students will understand this as landmines, right? Some of you guys done landmines yet in your course? Okay, two things are happening here. What is the reason that this pushed down so hard? That needs to be observed by you. That needs to go into your radar. We can't just be happy about it like, oh, we're getting a pullback. We need to be concerned about it instead and be like, what's happening? Right? So it comes down very aggressively. That means if this is my big boy, there's something about this price that my big boy doesn't like. That's why it came down so aggressively. But then when it comes down to here, he makes a V formation, and it's like there's something about this price that makes my big boy try to come back. So now I'm in a dilemma. Sellers are selling, and my big boy is showing some strength in this area only. In this area only. So what is the answer? Should I just buy it from here? When the test happens, when we get a little logical test showing us it's struggling, should I just buy it? If you ever get stuck in that scenario and you do buy it, always remember there is this thing here that the big boy was scared of. You have to be careful of that. If you want a movement to run smoothly, you have to make sure that the sellers are coming in struggling. Yeah, you have to let the sellers die. Okay? It's so simple, so logical, yet so many times overlooked because we get so caught up in design and patterns that we forget what's actually happening in the market, right? So keep these things in mind. Keep these things in mind. All right. Now the bigger pullback that I showed you guys earlier, when the markets are going up, let's say, again, this is the 60 still, and then you got a strong pullback coming in, then you got some sort of a V formation, and then we got a weird spike trying to go up, and then it comes down a little bit deeper, and then slows down, and then, gets ready to take off like that. Okay. This piece right here, what do you think this looks like on the higher time frame? On the 4 hours. So remember that range that we had on the 4 hours, right? Let's say this is that range thing here. So that range is doing this. I'm going to draw the 4 hours here now on the bottom here. Okay, so the range was doing that. Market popped out very aggressively. Okay, you don't see any details of it because it's just one big candle. But then this orderly pullback that you see for a very, very long time is actually doing your rubber band man. It's showing you a struggle on the 4 hours, which means now this trade has turned into a much larger trade. it now becomes a daily 4-hour trade. Okay, does that make sense? Okay, I can see some aha moments and some confusions as well. Okay, I'm gonna repeat it again. I'm gonna repeat it again. I'll repeat it in a different way. Okay, I'll repeat it a different way. Normally, we say 4 hours is, let's assume this is our big boy time frame, right? We look at two time frames. Okay, big boy time frame and our trading time frame, right? We'll call this the TTF. Okay, I don't like abbreviations, but we'll just call it TTF for the sake of my Picasso drawings. Okay, so we got the 4 hours, we got the 60. The markets were in this range on the 4 hours, and then they popped north. Boom. And we're like, good. Buyers are in control. Give me a pullback. Show me it's struggling. I will buy it. On the 60, this movement up looks like this. Very aggressive. It's like, yes, we have now a break above the range. And now the pullback on the 4 hour looks like this. On the 60, it's going to look like this. And then you have a movement like that. Right? That's how it looks like. That's your trade right there on a higher time frame. But on your trading time frame, you see all the details. Correct? Now, I'm going to just modify this on the right side a little bit. If you have a strong move down, like from here, a strong move down, right? I'm going to modify it a little bit more, sorry. Okay, so if you have a strong move down, even though it has a V formation and everything, it'll try to stop it here again. It'll try to stop that. So the market will try to go up, fail, and then possibly go down deeper and then prepare to go up. This extended period of time will now show up on your 4 hours, which means it is now in the eyes of even the daily time frame, because the daily time frame is now watching this as well. They're like, oh, I can see my 4-hour time frame is pulling back. They will notice it on their time frame as well. So that means these guys are also like, oh yeah, money time. Okay? Now, when you're trading this on the 60, and you have your, let's say your V formation here, let's say that's your V formation here, right? And you take the trade from here as a buy, but you also know your buy is lining up together with the 4 hours. What do we call that? Okay, these are four course bundle students. We call it an eclipse. You know how the sun and the moon line up? This is a, a message from God. No, so we call this an eclipse, right? We have two things lining up together and then going for a strong shoot. So that means the chances of this not just going to your recent high of the 60, it can even go higher to the next recent high. Make sense? So far so good? Okay. All right. However, now here's the thing. Here's the thing. This, I'm going to help you conquer this today because this is a problem for many people. Okay? Don't get me wrong. I mean this in a very unique way. I don't mean this in general in life. I'm not saying, you know, I'm not saying idiots are going to be rulers of the world. I'm just saying in trading Forex, if you just rely on too much knowledge, it doesn't necessarily mean you're going to make it work. Okay? I'm going to explain that to you. Oh, by the way, I didn't do a webinar this Tuesday, but I'm doing a webinar this coming Tuesday. I'll send out an email tonight or tomorrow regarding that. And it's going to be on motivation and trading psychology. and it's going to be on Facebook Live. So I hope you guys will be there for that one. That one's going to be a public webinar. Okay. So because it's very, very critical to hack the brain a bit. Okay. Same time, Tuesday, same time. All right. Anyways, so what I mean by this, knowledge does not equal to success. Here's the thing. This is where the problems are going to come, because this also brings in problems. Okay. Okay. Yeah. If any of you guys who are still very, very young or in college, I don't want you to go up to your parents and say, you know, Naveen told me knowledge is not success, so I'm quitting college and school and everything. Like, I want to get my phone start ringing. Hey, did you tell my son? Okay, so anyways, now when we see this movement, right? Let's say you're a 4-hour, 60-minute trader. 4-hour, 60-minute trader. Okay, now for those of you guys who are in the MPAs, you guys understand where you need to put your stop losses and take profits? Yeah. Those of you, I'm going to brush through it really quickly. And I feel there's still a little bit more to cover, so I'm going to make this webinar an hour and 10, maybe hour and 15 minutes today. Okay? Sorry if that's over your scheduled time, but I'll make it a little bit longer. Okay. So let's take a look at this one here. So this is you, right? You're a 4-hour, 60-minute trader, as an example. Okay, that's you. Okay? So as a 4-hour, 60-minute trader, you're looking at this on the 4-hour time frame as, okay, I saw this thing recently just break out. I like the way things look. Give me a pullback, I will buy it. Right? So you go down to the 60 minutes and you're like, oh, the 60 minute now, okay, I'm going to pause it right there. Just focus on this side of the screen. I'm going to explain take profit and stop loss real quick. Yeah, my brain is going on fire. There's so much information I need to share. Okay, hold on. So let's cover this first so I know everyone's on the same page before we get into it. When the 60 minutes starts pulling back like this, struggling. Breathe. Okay, you get your V formation. You get your test coming in, and you prepare to buy, and you hit the buy. Where do you put your stop loss? Yeah, below the V, but a little bit lower than the V, right? Because this V formation is equal. For those of you who do not know V formations yet, it's coming up in your Mastering Price Action course. Okay, a bit below the V, because this is an equal V formation. There's two types of V formations, right? So this means the seller was going down and it completely turned around and the buyers came back in. So this is your stop loss. Where's your take profit? Okay, recent high or the previous highest point right here. That's your take profit. Okay? Okay, generally speaking, of course you can find some landmines in between, but that's a more advanced topic. So that's generally your take profit there, right? Now, so far so good. Everyone understand stop loss take profit? The general idea? Okay. Now, here's where the problem comes in. Okay. Now, so this 4 hours is starting to pull back, right? We're looking at the pullback. It's starting to pull back, and you're a 4-hour, 60-minute trader, and you're like, market's going up. I got a nice little pullback coming, but it's coming in aggressive. Okay. And then it does this sort of a V formation. It doesn't go up. It actually starts coming back down. And then it does this V formation here. It does that V formation there. And then it's doing a test. And I'm like, yes. You know, I'm going to get ready to, oh, sorry. Let me move this out. I'm going to get ready to buy this right here. Where's my stop loss? Now, this is an eclipse trade, right? This is the one that comes in deeper. That means your 4-hour is coming in deeper also. So we buy it here, stop loss here. That means the buying is happening right there, and the stop loss is right there. Now, for the 4-hour guys, are they done with the sellers? This is where knowledge can become a problem, because we think, well, hey, the big boy is getting ready too, and here we got the V formation. We need to get ready to go for a long, but then it's not here. So, okay, what if it comes up to here and then it does some sort of a test here? Now I have a V formation on my 4 hours. So if I buy it now and I put my stop loss here, is that good? Now also no, because now for the 4 hour, where's the stop loss supposed to be? It's supposed to be here. We can't put a stop loss up here as a 60-minute trader. That's going to cause a problem because the big boys are involved, which means big spikes, bigger movements, bigger messes. Okay, is that starting to make sense? I'm gonna re-explain it in a different way. And I'm glad this is an MPA webinar because it is a little bit more complex. And like I said, I will repeat it. I will do this for a sell side now, so you understand. Okay. All right, here we go. Now, we're gonna do this for a sell side, which means, again, this is you. Sorry, I don't have clothes right now, but that's you right there as a 4-hour 60 trader. Okay? You're on this very hardcore vegan diet, so you're very skinny. Okay, so we're going to do a 4-hour 60. Okay? And you're looking at this as a sell. The markets are going sideways, sideways, sideways. And as it goes sideways, it now plummets. And you're like, oh, fantastic. Fantastic. You want some gel in the hair? Here you go. Okay. All right. So we got some nice sells in there, right? You know, we got some strong sellers coming in, and as the strong sellers are coming in, you're like, oh, good, sellers territory. Give me a struggling pullback, and I will sell it. Give me a struggling pullback, and I will sell it, which means I need to sell that, right? So that's my 4 hours. Let's see how this looks on the 60. On the 60, let's say this is the range part. It breaks out of that range, nice and aggressive. We're like, oh, very nice. Very nice. And as it comes in, okay, as it comes in struggling like this, and it gives us our V formation, and it does a test. And if I sell here, where's my stop loss? Okay, above the V, right here. My stop loss is going to be here. Okay, it's going to be above the V. Okay, where's my take profit? Okay, previous low right here is my take profit. Okay, so entry is here on the 4 hour, stop loss is there, take profits down here. Very straightforward. The trade might end up going like that, and you're good to go. And you made some money in there. You extracted your edge from the market, which is you've extracted that one thing that you know how to do very well. You've extracted money from that. Whether it goes lower low or not, that's not our concern. Our concern is, can we pull out money from this again and again and again? Okay, up until this point, everything makes sense? Okay, the details of how to do the sell is obviously covered in the mastering price section. So for those of you who have not got there yet, but what I'm trying to explain is something a little bit more valuable. Okay, so now let's change the scene a little bit. Remember earlier I was telling you guys that what would happen to your knowledge. Okay, let me remove all this for you. Okay, now we have that deep pullback that we were talking about. So the move up goes like this, very sharp. And we're like, oh my God. And then you got a V formation, but then the sell doesn't happen. It bounces right back up and it tries to go up again. And then it makes a V formation here. But to us on the 4 hours, now the 4 hours is starting to see something like this. They're also doing a struggling pullback now in the 4 hours. That means they're now interested. They're like, what's going on here? Right? They're interested also, the daily 4-hour guys. Now, as this thing, let's say, does this, that's a V formation now, correct? And if this thing does something like this and you're like, oh, perfect, that's my test, it's preparing to go, I'm going to sell it right now, and I put my stop loss right here, you're going to be in trouble. Because that stop loss means on the 4-hour, your stop loss is here. You see that? Where do we normally put our stop losses when we have a V? We have to put it above the V. So what happens is in this situation, when you're looking at the 4-hour and 60 together and you have a deeper pullback, only thing that's going to mess you up is if you get greedy with this and thinking that, oh, I got to catch this sell right here as best as I can and get my stop loss right there and I get to ride it. Yeah, so the big boy also has to do their because the big boys are interested. Now, the problem that I wanted to explain from all this, okay, the problem I wanted to explain for all this, and for those of you who are still not getting it, it will make sense. Give it another week or two as you go more and more into the MPA, or as you go more deeper into the 4-course bundle. This is it's going to make sense, and it's going to be one of your most powerful assets. Okay, so if I remove all this, okay, if I remove all this, and I want you to understand one thing. You're on the 4 hours, and here's the 60. Okay? Markets are like this. They come down hard. Okay? They break that support. Then they were making a high. Okay? Which is the same as this. Then that high was happening, and the high was sharp, very aggressive. V formation. V formation never came down. It tried and got knocked back up. And that thing looks like this. This now is starting to change some information for you, which is now saying, wait a minute, according to now the 4 hours, the immediate information that you're getting for you as a 4-hour 60 trader is your big boy is saying you're in a buyer's market. Which means all this information is telling you, do not look at this as a sell, look at this as a buy. When you mix these two together up, that's where the problem comes in. That's where I say knowledge doesn't always mean success, because too much knowledge will activate the wrong side of the brain that says, oh, I see an opportunity. Yeah, and a lot of you guys will experience this already, and I'm seeing a lot of you guys are getting aha moments from this, or seeing that, oh yeah, this is some nonsense that keep happening to me as well. This is where the problem comes in for many of the students. So you have to be very careful of this area. Okay? Because not all the time will the trade instantly go down from here, because it's going up very aggressively. Now, let's bring this on to the charts, shall we? Let's take a look at this on the charts. Okay, so we've done the theory part. Let's go practical. Okay, here we go. All right. Now, let's assume you are now, let's assume you are now a daily 4-hour trader. Okay? Right? You're a daily 4-hour trader. That means your daily is your big boy and your 4-hour is your trading time frame. Let's go to the daily. Okay. Now, maybe it's too small. Let me make it bigger. Yeah, is that visible for everybody? Okay. Now I'm going to take a screenshot of this so we can draw on this nicely. Okay, there we go. Okay, fantastic. There we go. So this is the daily, your higher time frame. Your higher time frame says boom, 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 boom. Buyer's market. That's the most recent thing it's telling you, right? Let's assuming, oh, sorry. Okay. Let me, there we go. Okay. Buyer's market, that is the latest thing that we see in the charts. I blocked off the part of the future. Okay, so far when you're looking at this market, you're like, okay, buyer's market, I get it. Give me a struggling pullback and I will buy it, right? That's the normal consensus, right? Give me a pullback and I'll buy it, which is like, give me, if I go down to the 4 hours and I see some kind of a boom, 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 V formation, I will hit the buy. Correct? Now, we're going to use the same example. We use the same example that I've been trying to teach you guys here. And I'm going to show you here. So I'm going to remove this. I'm going to take you down to the 4 hours. And I'm going to show you what I mean by the markets can come down aggressively. Wait, where is that area? Hold on. Okay. All right, here we go. Okay, I'm going to take a screenshot again. So our job was look at it, give us a pullback, and we'll take the buy. So the pullback is starting to come in. Now, look at this up move here. Look at this down move here. That's weird. Up move here, down move here. Okay, so we're looking at this and we're like, okay, sellers are trying to put up a fight here. All right, let's see what else happens. The sellers are coming in, they slow down. They slow down, so we're going to move it a little bit more. Sellers get a little bit more aggressive. Slow down, slow down, slow down. And then, is that a V formation? Could we count this little piece as a V formation? No, it's too small. A V formation is a sign that your big boy is back. Your big boy meaning this fella who was doing this upward movement, he's back in the game and he says, you're coming with me. You know, that deep voice, you know, Marvin Gaye voice kind of thing. So he's not here yet. We're not seeing him yet, right? So what we're going to do, let's take a look at this even further. We're like, oh, it's going even deeper. Okay? And then, is that my V formation? Oh, that looks like a V formation. Is that it? No. Look at the way it came down for the V. Look at the way it went up for the V. There's a difference in power. That's not my big boy saying, I am back, baby. It's not confident enough. So we're like, well, no, that's not it either. Okay? So, we're gonna take this even further. So we're like, oh, we can't buy it yet. Okay? Oh, but it's going up. It's going up. I need to buy it. If I don't buy it now, I'm gonna miss the trade. So I hit the buy right here. In this fear of I'm gonna miss the trade, which we all call FOMO. Okay? FOMO is obviously fear of missing Ontario. No, I'm just kidding. Yeah, it's fear of missing out. Okay? Like you feel like you're gonna miss out on this trade. Okay? So people hit the buys right there thinking that that's the V formation, that's gotta be it. They hit the buys, and what happens to the buy? It tries, and it fails. Now, at this stage, what's going to happen is two things. What's going to happen is two things are going to happen. The person who was taking this just got stopped out thinking that, oh, it's a buy. Everything that I've been taught, you know, with the V formations and everything, they all happened. And I hit the buy. Why isn't it working? Why did it go against me? Why did I get stopped out? They're still looking at this as, okay, now when is it going to be a buy then? Because it's still all the way up in this area. It's still buyer's territory, right? So when is it for a buy then? Maybe it's later. Without thinking of it that, wait a minute, because look how much time this is spending, maybe the daily is changing a design. That is the missing piece. The daily is now changing its design. Now let's go back to the daily at that stage and take a look at it. So at this stage right here where we were, right there, okay? I'm going to go into the daily and I'm going to show you that. The daily is now changing design and it's breaking down, making lower low sequences for us. And we're like, oh, so then I guess it's seller's market? Is that what's going on? But isn't this the guy who started it? Right? Does everyone get this confusion? The guy who started it's down there, but then it's showing us it's a seller's market because it just broke my recent support. Overall, it is still a buy. However, for you as a daily 4-hour trader, your job is my big boy says sell, I sell. You have to look at the recent market to tell you what your big boy is doing, because on the 1 hour on your trading time frame, which is the 4 hours, you are now observing this as this is now a sell. Give me a pullback, baby, and I will sell it. But what's happening to the other players? They're thinking, oh, actually, that's my V formation right there. I need to buy it. You see where the problem comes in? That little mistake of moment because you weren't able to understand this shift that now the daily is coming and being interested as well. Your big boys are interested also. The fact that it pulled in deeper means your bigger boys are interested also. Now, I want you guys to ask this question to yourself. Do we know this information ahead of time? Did we have the clues ahead of time? We did, right? We had the clues. The V formations weren't looking so good. They were really weird. Okay? This wasn't a V formation. This V formation looked really weird. Sellers are way too aggressive. All the signs were there. All the signs were there. Hence telling you that this is probably going in for another sell. Okay? It goes in another push, and our job is now, can I grab this next movement down? Is there an area for me to get in to get the next movement down? Now, there's your V formation there. There's a 4-hour 60 trade in there. Okay? Markets are moving up, moving up, up. So we got all kinds of trades in there. Here's your V formation coming in very hard, and your trade actually is going to be this fella here. It doesn't make it all the way to the recent low, but it makes it down to here only. Okay? If you lose track of who is your big boy, and you start picking up different bigger boys, and you're losing track of, wait, what am I supposed to do? That's where the problem comes in, because now you have too much knowledge. Does that make sense? That's why I wanted to say knowledge doesn't always mean success, because a brainiac kid from school will always do worse than a person who's just strolling through life and he's just like, I'm curious, show me.
A bookworm will always end up last. That is always the rule of the world. Okay, you must understand this. You have to look at it with your own instincts. Use your brain that the world or the universe or God, whatever it has given you, use your brain to the full capacity of, I can see that, something is happening. Something is happening. Yeah? So far so good? Everything making sense? Tim, what are the two best time frames for trend trading? The higher time frame, the better, I would say. Especially if you're starting off, I would say go for daily 4 hours or 4 hour 60. Okay, that's already pushing it, 4 hour 60, but it'll keep you busy there. And I would not weekly, I would say, because you also need practice, right? Okay, so daily 4 hours, 4 hours 60. 4 hours 60 if you got a little bit more time. Daily 4 hours, you can even do it part-time. Sound okay for everybody? Yeah? Okay. Okay. Yeah, it's a bit choppy. Sorry, there's something wrong with my internet here in Bangkok. Not sure what it is, but we'll get it fixed. We'll get it fixed. Okay. So do you see how the rubber, yeah, so the question is, what about the rubber band man, right? Like, so do you see how this plays a role with the rubber band man? So the rubber band man, before, you were just looking at this as, okay, at what point does he rest? But now you're comparing the run to the rest, and you're saying, what are the differences? Wait a minute, why is his run weirder than his rest? That means he's still got some power in him. Okay? All right, all right, all right. So let's go back into this. Open up the whiteboard again. Okay, can you see the circle? Okay, great. Yeah, yeah. This is pure price action right here. There's no indicators, nothing. You're just trying to understand, well, what is happening in the market? What can happen? Here's another piece of nugget that I'm going to give you guys today. Now, when you have those deeper pullbacks, right, which happen regularly, okay, the eclipse kind of trades. So you have your up movement. We're doing the same example. Let's say that's the 4 hours. Oh, sorry, this is the 60. Okay, so this is the 60-minute, right? The 4 hour had that little range it popped out of, and then it's starting to pull back, pull back, pull back, very aggressive, and then V formation tries to go up, doesn't do anything, and it pulls back deeper. Okay, now you're as a 60-minute trader, you're used to trades going for 30 to 50 pips, approximately, correct? Those 30 to 50 pips happen within 1 to 3 hours. Now, in those 1 to 3 hours, you've trained your body to get accustomed to this kind of movement and waiting. When you take a trade from here and you try to take it all the way up to here, two things you need to keep in mind. So I'm going to give you the pro and the con, okay? Pro on how to do this, and con on why this can be dangerous if you don't do it right. Okay, two things. This is no longer a 30 to 50 pips movement. This now becomes, let's say, a 100 pip movement, which is a bigger movement because it doesn't belong to the 60, it belongs to something of the 4 hour. Okay, which also means it's no longer going to be 1 to 3 hours. It can take anywhere between 4 to 12 hours. Which also means, do you notice when markets move 100 pips at a time? How does a market move 100, 150, 200 pips at a time? How does that happen? News. So now when you're working with these type of trades, you also know these type of trades are not going to happen without the right time of the market, which means around market opens and you need some kind of a reason for the market to move that kind of distance. Does that make sense? Now, these are your clues that you gear up and prepare for. You work ahead of time to get this information. Yeah, Euro Open is the best. US Open is also fantastic. So knowing this stuff gives you a heads up. Not to mention, don't forget your stop losses needs to be based on that higher time frame if you do try to take this kind of trade. Okay? Otherwise, our job is to hit these sells as a 4-hour, 60-minute trader. Hit these sells. Don't try to catch this big buy, because trying to catch that big buy, you're going to have a stop loss and you're going to miss your sell opportunity as well. So two things are going to happen. That's like a double loss. Right? That is why it's almost like, you know, some person might say, oh man, I caught that 100 pips. But you can say, I made 30 pips here and 30 pips here on the way down, for example. Okay? Because, sorry, just 30 pips here on the way down, because that was my job. But my risk reward was 2:1, because my stop loss was only 15 pips. And this guy's going to be like, well, my risk reward was also 2:1. Well, isn't that the same thing? You earned the same money as him, except only difference is this guy had to wait 4 to 12 hours. You did it in 1 to 3 hours. So stick to your time frame. Make it your home. Make it your time frame where you know it like it's your own baby. You know everything about it. You know how it moves. You know how it flows. You know when it pauses, and you want to stick to your time frame and make it yours. Okay, Gareth, I work at night and I want to trade during the day. What would you say is a good time frame for that? 4 hours 60, and around market opening hours would be the best. Yeah, 4 hours 60 would be good. Don't force yourself to take too many trades. If you want to take more trades, use like trade simulators like Trade Interceptor or Forex Tester and stuff like that. So you can practice there and do it faster. Okay. Naveen, can we look at a live chart of Aussie New Zealand now, daily and 4 hours? Yeah, let's have a look. Daily, 4 hours. Okay, let me clean this up. Aussie New Zealand. Okay, daily. All right, there we go. So, got a daily chart here. What's the territory of this? WSO, you're asking Trade Interceptor. It's just a software that you can replay the market and trade on it. Like you can replay it for, let's say you traded yesterday, but you want to redo yesterday. You can replay the market like a video player, and you can actually place trades on it. So that's Trade Interceptor, and Forex Tester is like that. You can test your skills on the previous market. Okay. All right, so buyer's territory, right? We can see it's buyer's market, buyer's territory. This is the most recent breach that we can see. Okay, buyer's territory, and we're looking for some kind of a pullback so we can buy it. Now this pullback's coming in. Now, would you say the moment I see a V formation, Naveen, I'm going to get in? Yeah, there's a problem with this one. There's an issue with this one because it's coming down so aggressively. Like, what's up with that? Right? So what's going to be interesting is to see what happens here. Now, what happened at this same price last time? What happened at this price? Okay, what happened at that price? It went boom. It went straight up. Look at that price now. What's happening at that price now? Look at the buyers. Where's the boom? It's slowing down. So wait a minute. It's buyer's territory, but my buyers aren't showing sign of coming back. In fact, all I see is these big red candles. You know, it's a point of concern. It's a point of concern. Right? So you want to keep these things in mind that, oh, looks like there's going to be an issue. So what's going to happen is this thing can try to go up, but there is highly likely that this thing will try to make a new lower low or hang around in this range for a bit before trying to make its high because it's in a buyer's territory. Okay, so those are the two options. He can try to make a high and drop, or try to make a high, continue sideways, and then go up. Okay, is the audio dropping for a lot of you guys? I hope it's okay. I keep seeing no audio for a lot of people. Yeah, a lot of you guys? I hope it's okay. I keep seeing no audio. A lot of you guys? I hope it's okay. I keep seeing no audio. You guys have reached a roadmap in the four. You guys have reached a roadmap in the four. One last lesson that I haven't recorded yet, but it's gonna be out today or tomorrow at the latest. So for those of you who are at the end, it's been a hell of a long journey. 6 months you made. It's been a hell of a long journey. 6 months you made it. You made it alive. And the statements that I see from you guys is absolutely fantastic. You know, some of these numbers that you guys are showing me is better than mine. So congratulations on that. I'm just going to tell you that. It's better than mine. So some of the percentages that you guys are earning is way better than mine. So very good. Very good. I'm very proud of you guys. Okay. Okay. Is the four-course bundle helpful for a stock trader and not Forex trader? Yes, absolutely. Absolutely. Concept. You got to find stocks that concept. You got to find stocks that concept. You got to find stocks that work together. You know, like technology stocks work very similarly and together sometimes. So you want to keep track of stuff like that. Okay, yeah, so BZ, last piece of the four-course bundle is going to be released either today. Last piece of the four-course bundle is going to be released either today, Koh Samui, and we'll be doing the webinar from Koh Samui on Tuesday. And so you guys will have that before then. So any questions at this stage? Anything that you want me to quickly cover? Okay. We got 5 to 10 minutes with us together. Any questions? Barry, so how would you take this trade? Okay, so on this particular concept, so this is actually a very good question. So how would we take this trade? Now, that is one question. Okay, the next question, which is probably more powerful, should be, or should I even take this trade? Okay, which means if you want to find something that is more logical, you can look into the correlating pairs. So for example, this is Aussie New Zealand. Let's take a look at it in the entire Aussie group and see, hey, if this is showing me, okay, everyone just focus here, okay? If this is showing me signs of sellers, right? Everyone agree with me? This is showing me signs of sellers coming in very strong, but I'm in a buyer's territory. We don't like that, right? We don't like sign of sellers in a buyer's territory. But let's go into the Aussie group and see, wait a minute, is there sign of sellers in a seller's territory? Maybe that pair might be better for us to interact with. So let's have a look. Let's just scan the markets. There's nothing wrong with that. Take our time. Yeah, with the wind in our backs. Audio is gone. Audio is back. Audio. I'm back. No sound. I'm confused now. Is it back or not? It's back. Okay. All right. Okay. So let's take a look at this on the 4 hours. So we were looking at Aussie New Zealand. So this is Aussie New Zealand. Okay, let's have a look. He's saying Aussie is weak, but it's in an uptrend. We don't like that. He's saying Aussie is weak. This one is in a money spot. So we know this one is going to blast. Okay, that's interesting. If he says Aussie is weak, hey, this one looks a little bit much more friendlier, doesn't it? Look at that one. This means Aussie is on the right side on this one, which means this one needs to go in an up direction. This one is a higher high sequence, right? He broke the high, he made a higher high. That looks even better. This one also needs to go higher, but this one doesn't show a higher high sequence, so maybe that might not be a good one. Okay? So we can scan through the markets and be like, well, what's the better option? All the Aussies are correlating, they're doing the same thing. So do I have to take Aussie New Zealand? And that's where you get your answer. And saying, oh, maybe I can reduce my risk. Does that make sense? I believe Barry J, it was your question on this one, right? Yeah, there you go. So that will help. So the question is on USD Swiss franc. Let's have a quick look at that. USD Swiss franc. What time frame? I don't know who asked me USD Swiss franc. I just looked at it quickly. What time frame? 4 hours. Okay, so here's the 4 hours. Markets are already going down. When the markets were down yesterday, I don't know if some of you guys were there at my premium webinar at FX Street. I mean, it's not important to be there, but if you guys were there, I discussed this trade in thorough yesterday. But this is the next move down. Say, I was talking about this one yesterday, that sell happened, but this is the next move down, which is strong move down. Show me a struggling buyer and I'll sell it. Let's go take a look at that struggling buyer on the 60. Okay. Oh, here we go. Forget the struggling buyer. We don't see any signs of buyers at all. Mostly sellers just keep coming in every time. So this is very difficult to catch because we don't know if there's any buyers getting stuck in this. So that one's a bit difficult. Okay. So nothing right now. There's nothing there right now. When the market keeps running, there's nothing to do. It's all because then we're participating. We want to only anticipate. Are you going to deal with how we prepare ourselves in the trade in your psychology webinar next week? Yeah, so this Tuesday, the webinar that I'm doing on psychology, I'm going to try to dig deep into your brain and make you a performance artist, right? So, the stuff that I do, the stuff I do, with Lucille as my girlfriend, what we do to figure out how can we perform better, in life, in trading, and everything. Because trading is just like life, right? What stops us? What excites us? There's a lot of emotion flying around in trading, okay? Because we have too many dreams attached to it, right? So we have to work on that to control it, to balance it, and to make it a goal. And we're going to talk about that a little bit too. This is something I normally only discuss with my one-on-one students, but I feel it's a very, very important topic. It gives them performance. I believe it will give you guys performance as well. So I'm opening it up this Tuesday. Okay. All right. So how many trades we should take in the 4 hour, 1 hour in a day? It depends. Sometimes you have setup, sometimes you don't. Okay. So you'll get around 2 to 3 trades in a day. Okay. Given you only take one currency per group. If you're taking 2 or 3 currencies per group, then you'll have like 7, 8 trades per day, I would say. Okay. I am in the US. What broker should I use? No broker questions for me, please, because I'm not a pro with brokerages. I personally use interactive brokers, and I have a few experience with some brokers like Forex.com, FX Pro, and stuff like that. But management constantly keeps changing in these brokerages. Sometimes they're good, sometimes they're bad. So it's very hard to say what's a good one, what's not a good one. All I can say is you got to do your homework to be safe in your trading, because brokerages will do their best to stay in business, right? So they're always going to fight and compete. A good one will turn bad, a bad one is going to turn good. This is always going to happen. All you can do is you do your part in being a pro trader to avoid brokers' problems. That's going to spike you and stuff like that. Okay? All right. Can we make 3,000 to 4,000 in a month by trading 1 hour, 4 hour charts? That depends on your account size. That depends on your account size. You'll be surprised of the statements that I get in from some of these students. They're trading small accounts, like $2,000 accounts, but the turnarounds that they make on these accounts and the time that they do it, it only happens when they can calm down. When you can calm down and pace yourself and be patient and do it step by step by step and not rush into it, you know, that's when you'll see a really big shift happen in your trading. So all of you guys now, I want you guys to make me a promise that you guys will not make sudden decisions in your trading. You will do an analysis for at least 30 minutes before entering a trade. Promise me right here, no trades before at least 30 minutes of analysis. If you're trading inside 30 minutes of analysis, that means that trade is likely to fail. Use your knowledge I have given you in the courses. Use your knowledge from your peers. You have the skills. Use it correctly. Use it well. And I've seen you guys can do it. I've seen your progress. Just make it consistent now. Make it consistent. Yeah? Good, good. So that's all the time we have for us today. For those of you guys who do not have the 4-course bundle, I'll send you guys an email. I noticed a lot of you guys were asking questions about that. So we'll send out an email for that. And the recording of this will be sent out when? Today? Tomorrow? I would say approximately in 24 hours, if I can get that up and edited and out for you guys. Okay, thank you for coming. I really appreciate you guys being here. It's always a pleasure, and you guys are the best. Thank you so much, and keep up the good work. I look forward to seeing your further progresses. Cheers. Bye for now.